Welcome, ladies and gentlemen, to a new edition of our virtual online roadshow series of Swiss Resource Capital and Commodity TV. My name is Jochen Steiger. I'm the founder and CEO of Swiss Resource and also the founder and chief editor of Commodity TV. And it's my honor and big pleasure now to announce my good friend Amir Adnani, who is the CEO from Uranium Energy and is with us today for a great update on the company and on uranium market. Amir, how are you? Good morning to Canada.
Thank you, Jochen. Pleasure to be with you and great to connect virtually.
Yes, fantastic. I hope we can do it soon personally. That would be also great. But it is what it is in COVID times. And but maybe in the second half of the year, things are lightening up with all the vaccinations. Before we start, and I see people here checking in, that is fantastic. We first of all, have some remarks here. As always, we are fully complying to the European, Swiss, and Great Britain data security laws. So nobody can see each other. Nobody can see the names nor the email addresses. If you want to have or if you want to ask a question, please type it into the chat function, which you see marked as chat. And I will then ask your question to Amir after his 20-25-minute presentation for a very lively Q&A. The whole event runs approximately 50 minutes to an hour. And of course, be sure we will talk not only about Uranium Energy, which is no doubt a fantastic company. I'm a shareholder of the company too. I should say this for disclosure reasons, but we want to talk also about uranium markets because it looks like that something is really finally going on here. So, and let me look again here, update. Yeah, well, people are checking still in. That is great. And I think I bring up now the slides. And I would say, Amir, the floor is yours.
Excellent. Thank you, Jochen. And what a difference a year makes, especially in uranium, for UEC, for the uranium markets, year over year. I just can't believe how much has changed. I mean, we got a new president in the U.S. We have a whole new kind of macro backdrop. Here's our standard disclaimer statement. And I'm going to kind of really start by maybe kind of reminding everyone here about the positioning of UEC, and then we'll talk a little macro, and we'll go back to the company. But today, Uranium Energy is truly the leading pure play American uranium producer. We have production ready, fully licensed, low-cost in-situ recovery projects in Texas and Wyoming. We have the largest resource base of fully permitted projects that are in-situ recovery amenable of any U.S.-based company. This is our Reno Creek project in Wyoming and our South Texas hub and spoke strategy, along with our fully built and permitted Hobson processing plant. We have recently established, and we'll talk about this later, a physical uranium initiative. And this is an initiative where we have gone into the market and we have acquired 2.3 million pounds of physical uranium that's in a drum, sitting at a warehouse in the US, the only warehouse in the US, ConverDyn. The mark-to-market value of our inventory position is about $70 million. All figures that I'll be talking about today are in US dollars. We're a US company. We've really moved the balance sheet into the strongest position that it has ever been in. All the years that I've traveled with Jochen throughout Europe, meeting many of you that hopefully are online, Jochen has never seen the UEC balance sheet this strong. We have over $115 million in cash, physical inventory, and equity holding. Now, our equity holding refers to our 18% stake in Uranium Royalty. And that's the only uranium royalty company in the sector. We'll talk about that later. And right now, as we speak, we're actively developing. We're building the next uranium mine in the United States. It's going to be Burke Hollow. We're developing the first production area at Burke Hollow. This is going to be an in-situ recovery project. We've been drilling there, development drilling since January 26th of this year. We've been very busy. We are the only company in the U.S. that's actively building a new uranium mine right now. And this is going to be big. It's the largest production area ever developed in Texas and the largest one being developed in the US right now. And this is important because of some of the macro points I'm going to talk about here shortly in the US. And again, what a difference a year makes. A year ago, we had political uncertainty because we had the US election, and it was unsure about who was going to be the new president, if Trump was going to be reelected or Biden is going to win. And that really created uncertainty that the market could not resolve when it came to uranium. Uranium is a very policy-dependent commodity. Over the last 4 years with the Trump administration, there was talks of tariffs, possibly quotas, and so politics mattered. And so the market really froze. And when President Biden won, there was initially some scare in the industry because people thought, what position will the Democrats take? Well, what position will Biden take? And to our pleasant surprise, we have never seen a more bullish president and White House and development as we've seen in the last 5 or 6 months since the Biden administration took place. Why? Because first of all, the Biden policy of recommitting the U.S. to the Paris Climate Accord, to coming out, and President Biden just 2 weeks ago called a virtual summit with world leaders and committed the U.S. to net zero emission targets by 2030. All these commitments come with nuclear power in the mix. And the Biden administration has confirmed that in order to meet the net zero emission targets, nuclear power has to be in the mix. The clean energy mandate of the White House welcomes nuclear energy. There was a report last week that talks about providing even financial support to the existing 94 reactors if needed. And so what this brings us to is really the first time in 48 years that the Democratic Party platform officially supports nuclear power. And we have bipartisan support for nuclear energy. And there has not been a shift away from some of the policies that were introduced by the Trump administration, namely the U.S. Uranium Reserve, which was introduced last April. And then again, it just stayed in limbo. No one knew what was going to happen with it. And immediately, as Biden wins the White House, we get bipartisan support in the Senate and the House that passed appropriations, which means funding to fund basically the U.S. Uranium Reserve, which is a 10-year program to purchase $1.5 billion of newly mined U.S. origin. So it has to be a mine in the U.S. The Department of Energy is going to buy it and build a new government strategic stockpile. Secretary Granholm, the new energy secretary of the Department of Energy, has also been very vocal in highlighting the fact that there are 3 objectives at the Department of Energy now: fund the U.S. Uranium Reserve, support advanced research in the area of small modular reactors. Those are the micro reactors that are being used in everything from sending rocket ships to Mars that are powered by micronuclear reactors, to the aircraft carriers and submarines in the U.S. Navy, and a lot of smaller areas that don't have the same population density or need for a 1 gigawatt reactor that are utilizing instead the smaller modular reactors. These are big priorities for the U.S. And this is all coming at a time where the U.S. does not mine any uranium today. Yet nuclear power is the largest source of emission-free electricity, second largest source of electricity generation in total. And so when you think about what is the biggest term, what's the biggest buzzword in Washington, D.C. right now, besides electrification, besides net zero emissions, it's supply chains. And supply chains is an important term and concept, especially because it's a side effect of what we've seen over the last year with the pandemic. It matters where we get ventilators. It matters where we get pharmaceuticals. It matters where these things come from that are vital. And when we look at the supply chains of nuclear fuel in the US, from uranium to conversion enrichment, it doesn't exist. So the US government is very much behind the idea of addressing this crisis that the US has when it comes to nuclear fuel supply chain. There isn't one. And there has to be one when it plays such an important role in the energy picture. And globally, the best way, I think, to really talk about the global picture for nuclear power is really the same way. You have, in my opinion, 2 mega trends that are happening at the exact same time. It's decarbonization and electrification. Decarbonization talks about all the pledges that are being made by the US, Japan, the European Union, China with this new 5-year plan that came out. These are all countries, companies, and organizations that are committing to reducing their greenhouse gases by 2030, in some cases by 2050, and it all involves using less fossil fuels and committing to more nuclear power, number one. Number two, the electrification of our transportation. The more electric vehicles we put on the road, the more it requires consistent baseload electricity. And so we're looking at an environment today on the macro front globally where nuclear generation is back above its pre-Fukushima levels. So that means demand is strong. Over 50 reactors are under construction. Existing reactors, especially in the US, the largest market, have been extended. Their operating lives have been extended. And I believe that a decade of underinvestment in uranium mining today, what it gives us is an environment where there's much greater risk to the supply side, which is uranium. And I don't see a whole lot of risk to the demand side because the demand side is predictable, it's understood, it's the number of reactors that are operable worldwide, which is 444 right now. It's truly a global movement, and it's a movement around decarbonization that's really taken us forward, and that's a solid footing to be on. And we haven't been on a solid footing like this really over a decade since Fukushima in 2011. So those are the highlights I want to make at the macro front. Now, look, very quickly at the macro, there have been some incredibly bullish things happening in the sector in the last month. You saw Sprott Asset Management, big asset manager focused on commodities, announced a takeover of Uranium Participation Corp. Uranium Participation Corp buys and owns physical uranium. With Sprott taking over, they plan to really triple the size of this company, listed in the US, marketed as they've done with their physical gold and silver holdings. Sprott understands the commodity business. They'll be very good stewards and managers of UPC. That means we're going to have a constant bid in the market when it comes to physical uranium buying. Yellowcake PLC out of London has done the same thing. They're buying, they announced $140 million financing, bought more physical uranium. But then you also have companies like UEC. We've bought $70 million worth of physical uranium. You see the likes of Denison who've done the same thing. And so what you're seeing is you see something you don't see in any other commodity. The miners, the developers are buying the physical. At some point, this is setting the stage up for an incredible bull market, in my opinion, because the utilities are so slow to react. The latest IEA numbers that came out the other day shows the U.S. utility forward demand is covered now by 2.5 years. Only 2.5 years of forward inventories or forward demand is on hand with existing inventories. That's a very low threshold because remember, utilities can't buy uranium for next weekend's needs. They need to buy in advance. They need to buy 2 years in advance. There's 1.4 billion pounds of uncommitted reactor requirements that has to be purchased between now and the next 10 years. And so the buying pressure is really building up. The material is being sucked out of the market by the financial players, by the developers. And I think the utilities are going to have to play catch up. So in that context, the spot price is at $31 right now. It is well below incentive price, which is $60. It's well below marginal cost of production. As we all know, even the big producers like Cameco and Kazatomprom have shut their mines in or reduced production. And so there really has been a response to the low uranium price. Despite that, we are off of the low. The post-Fukushima low was $17 a pound. It was in 2016. So at $30, we've made a nice recovery from the Fukushima low. And of course, I think $70 is the next target. That was our pre-Fukushima price. That's the incentive price to see mine development globally. That's the next stop to really start to see supply development and supply expansion start to take place. So there's really meaningful upside in the commodity price. UEC, really, when we switch back and look at the portfolio today, we have one of the most diversified and largest project portfolio holdings of any company. This is similar to a major company portfolio. You see multiple projects, multiple jurisdictions, over 100 million pounds of uranium in the ground. Half of these projects are in situ recovery and fully permitted for production. We have inventory. We have 70 million pounds of uranium in the drum ready to be sold. That's something we never had before. And it gives us a huge head start to start cash flow when we see the uranium prices recover. At $70 uranium, our average cost was about $30 to buy the material. We have a $40 margin that we can realize at $70 uranium. We can sell our whole inventory position and realize an $80 million gain just from the position that we've acquired. When you look at the rest of the portfolio, we are the only company that owns an 18% equity stake in Uranium Royalty. Uranium Royalty has done very well year to date. They acquired royalties on the Cigar Lake and McArthur River mines that Cameco owns. It has a physical position as well. It has a strategic equity stake in Yellowcake listed in London. It's got a diversified royalty business. We own 18% of that. We also have a number of hard rock assets in the US, in Canada, in Paraguay. So it provides leverage to the uranium price, our portfolio. And our physical initiative was established really to take advantage of the low uranium price, a uranium price that's below most industry average mining costs. And our view was when it's below the cost of production, we're going to buy it and we're just going to store it. And we're going to make sure it provides a balance sheet asset to UEC and our shareholders because we believe the uranium price is going higher. Our investors believe the uranium price is going higher. So why not have something that's on our balance sheet that's better than cash, that's frankly being, doesn't grow at the same rate as we think uranium will grow. So we have cash and physical now on the balance sheet. This is an improvement to the balance sheet. It gives us the ability, having inventory, to also accelerate cash flows. If we see a high uranium price tomorrow, it takes 6 to 12 months to get the mines up and running. This way we can sell faster from the inventory. That starts to accelerate your cash flow. Finally, if we see a premium price for US uranium because of the strategic uranium reserve that's being set up, we can save our own production and sell it to the US reserve at a premium and sell initially to utilities from our inventory position. So it gives us the flexibility, having inventory, to take advantage of potential arbitrage in the market between a premium US price, maybe, versus what the global market might be. And moving forward, really, for us and for UEC, it's about having the infrastructure advantage. If we see a price of uranium that is sufficient to restart production, $50 to $60 per pound, we have the permits, we have the processing plant. We're a past producer of uranium. Many people look and say, how is a junior company going to become a producer? 99% of junior uranium companies haven't mined uranium before. We have. UEC is a past producer of uranium from our South Texas operations. Very quickly, at the balance sheet level, only 230 million shares outstanding, less shares outstanding than most or any company our age. We're a 15-year-old company. We've never had a share consolidation. We've only got 230 million shares outstanding. Very strong balance sheet. If you take out the 10 million of debt that we have from our cash and equity holdings, our net cash and equity position is $105 million, covered by 5 analysts. Very liquid. Our average trading volume over the last 3 months is about 6.4 million shares on the NYSE American, and seeing very strong institutional flow. We're seeing ESG investors that are focused on the environment and other aspects of decarbonization find our company, find our sector. This new trend of seeing ESG investors is a new trend for the entire sector, and frankly, a very positive one. Being in a position where we have, as the chairman of our company, Spencer Abraham, a former United States Energy Secretary, means that our company is a known entity when we go to Washington, D.C. and look to sell uranium or win business from the U.S. government. In addition to the fact that we're a past producer, in addition to the fact that we're a U.S. company, in addition to the fact that the executive VP of our company, Scott Melby, is the current president of the Uranium Producers of America, our industry association. Our company has the credibility, the individuals with the resumes and the profile that are known entities, known individuals to the counterparties that we want to do business with. Department of Energy in the U.S. and U.S. utilities and global utilities. Our technical team has been with the company from the beginning, has been there when we mined uranium. And so that skill set to go back into production is there and has been there for 15 years. We've had 15 years of really building the team, the infrastructure, and the processes to be effective at doing the hub and spoke strategy that we have, a central hub at our Hobson plant, satellite projects that are going to feed uranium into the plant. Our plant at South Texas is only 100 miles away from just the reactors operating in the state of Texas. There are reactors operating at the STP location. These are providing electricity to millions of homes in South Texas. In February, when there was a very cold, kind of a polar vortex that took place and a lot of electricity went out, gas pipelines froze. These reactors were operating, generating electricity. We have a great story in Texas. We can mine uranium in Texas for nuclear power plants in Texas. You look at a country like Kazakhstan, they produce a lot of uranium, but every pound of uranium they produce has to go to the foreign market, has to find a home somewhere. They don't consume any uranium domestically. Even in Canada, we mine more uranium than we need domestically. It's wonderful to have a market in your own backyard. In our case, in Texas, we don't even need to leave the state lines. We can sell our uranium in our own state. You won't find that in any other jurisdiction. And that really gives a lot of certainty. It gives us a lot of great opportunities. We're also near the port of Corpus Christi, third largest port in the U.S. if we want to ship the material globally to other players. And our Hobson plant is really equipped to handle uranium processing for us or for third parties. So we got a lot of scalability. Current capacity is 2 million pounds per year. But we're actually in discussions with the state to triple the size of our capacity at Hobson. We want Hobson to be the largest uranium processing plant in the country. And again, the proof of concept, we mined uranium at our Palangana mine with a $22 cost with taxes and royalties added in. All-in cost is about $27 per pound, assuming $50 uranium. Very low capex using in-situ recovery of $10 million. And projects in the future that we develop will be similar cost. The main project that we're developing, and all of our projects look like this. In-situ recovery has the benefit of having a very small footprint. There's no digging, there's no open pit, there's no underground, there's no waste rock. We're not digging for anything. We're injecting water and oxygen into a sandstone setting, and we're dissolving the uranium slowly and recovering it. And through a water exchange and ion exchange process, we separate the uranium that's been shipped using these trucks to our central processing plant for the finished product that we get. Our Burke Hollow project is the perfect example of the potential the U.S. has for new uranium discoveries. We discovered the deposit in 2012. We've drilled it extensively every year since then. We permitted the project. The project is large. We've only explored half of it. And already we're in a position where we've received all of our production permits. We're going to ship the uranium to Hobson, similar to Palangana. And this is truly the newest and largest in-situ recovery well field being developed in the U.S. right now. We started the development drilling earlier this year. We've already announced the results from 40 development holes, installing monitor wells that go around the production area. It's an exciting project because, again, it shows that there's enormous potential for discoveries in South Texas uranium belt. This is what the U.S. Geological Survey talked about in 2015 when they wrote a report saying that the area with the most potential for new uranium discoveries in the U.S. is the South Texas uranium belt. Our Burke Hollow project is one example of that type of new discovery. We're very excited about the potential here. And last but not least, Reno Creek, which is in Wyoming, fully permitted for production. It's in the heart of the Wyoming uranium mining area in the Powder River Basin, surrounded by companies like Cameco and Uranium One. Here we have a permit to produce 2 million pounds per year. Reno Creek is the largest pre-construction uranium project in the U.S. that's fully permitted. Over 26 million pounds of uranium in the measured and indicated category. And we're looking at ways of maybe even accelerating the production by doing toll milling or looking at some of that idled infrastructure that's nearby in the form of processing plants that are not being utilized fully right now. takes 7 to 8 years to permit a uranium mine. And so you can see the big advantage that UEC has is that we don't have just one, but 4 fully permitted uranium mines ready for production. And so the lead time that it takes, we've already passed that successfully, and we have the permits in hand. So to summarize and to hand it back to Johan, really, look, first of all, we've been very patient with this development of this company. As I mentioned, over 15 years of being focused on positioning and building to become the biggest and hopefully lowest cost uranium producer in the US and in the world. I appreciate many of you that might be on this call who have been shareholders along the way. I know it's been a long journey. The bear market in uranium has been the longest bear market in any commodity. But uranium, like any other commodity, is cyclical. And the cycles do tend to be sharper, and we have potentially in front of us a very exciting bull market here, because it simply is a case of either the uranium price goes up or the lights go off. And with this incredible commitment that we're seeing from all countries, all the major countries and energy and electricity generators in the world, at a time of these major global trends of decarbonization and electrification, I don't believe nuclear power is going to slow down. It's only going to grow. And we've had over a decade of underinvestment in uranium mining. And this will set up, and this is the classic setup for bull markets and commodities. And we are really could not be better positioned. Strong balance sheet with over 115 million of cash, physical uranium, and our equity holding in uranium royalty. Fully permitted. We have the first mover advantage. We get that move in the uranium price. We will be first to get out there, develop, produce uranium, sell uranium to utilities. Projects are in situ recovery amenable. That means low cost, low capex. 4 million pounds per year production profile right now and growing. That's based on our permitted capacity in Texas and Wyoming. And the physical uranium initiative we've established is unique. We're one of the only companies that actually owns physical uranium, and not little, a lot of it, 2.3 million pounds of uranium. That's a $70 million position in physical uranium. And we're actively developing. We're building one of the largest projects in the US right now, Burke Hollow, and it should dovetail nicely with the strategic US uranium reserve. First time since the end of, you got to go back to World War II. You got to go back to the 1950s. The last time the US government bought uranium was during the Eisenhower administration. It's historic stuff. And what's beautiful about it is in 2007, when we had a bull market in uranium, it slowed down because the US government started to sell uranium from their physical stockpile. This bull market is set up so beautifully because the potential sellers of uranium are not sellers anymore, they're buyers. Governments have been depleting their inventories. So moving forward, they need uranium as much as the utilities need uranium. And so I truly believe we have an unparalleled setup for the next bull market in uranium. And I'll stop there. And Johan, back over to you.
Fantastic, Amir. Thank you very much, as always, for a great presentation. So the questioning here in the chat is going through the roof a little bit. Before I start here, because I have to read a bit through,
Sure.
First question would be to me, what would be your incentive price that you really say, okay, we restart Hobson and we can produce US uranium? What would be your incentive price, and what would be the time frame to really ramp up, let's say, at least to 1 million pounds or 2 million pounds production?
So the price that we are looking at right now is in the range of $45 to $50, which is really not that different than what Johan we've talked about before. The restart at a project like Palangana would be roughly 6 months, and will get us into production within that time frame. And a project like Burke Hollow could be, compared to conventional mining, it's still very short, but it could be up to 1.5 years to get a project like that up and running. It's still very fast, but we are dealing in a COVID environment. There is shortage of everything. You do move slower. There's safety protocols that need to be in place. And this is a bullish thing that I don't think people are talking about. Everyone's still looking at uranium prices and incentive price being the same number as it was a year ago, right? $50. But Johan, I don't know about over there, but over here, lumber is 3 times more expensive. Everything is going through the roof. There's inflation everywhere, and you can't find people to work. So you're telling me that the uranium miners somehow are going to perform miracles, and somehow they don't exist on this earth, and they're going to build mines at the same cost, labor cost and labor availability, and diesel and petroleum and lumber, all those things you need for mining. We're going to do all of that at exact same price as 2 years ago. How's that possible? So if anything, I think the picture is become so much more bullish, because the response time for building these large scale mines is going to be longer. But what are we doing with our mining? When I showed you the photos of in situ recovery, am I using any lumber? Am I using a lot of earth moving equipment? No, we're just drilling holes. So we will be able to move faster, and our timeline and incentive price doesn't change much. But we do have to be obviously on top of our safety protocols, and we've been successfully drilling with our crew since the beginning of this year in Texas. Texas is fully open now. Restaurants, schools, universities. So things are definitely, it's a good place to be for being active and developing. Same with Wyoming. But ultimately, to answer your question, I think we will have one of the most robust paths to restarting and building new production.
Mm-hmm. Okay. Good. Then we have a question I have to still read through, because it's really a ton of it. I think this roadshow goes a little bit longer than we thought. Then we have a question from a fund manager in Stuttgart, whom you and I know very well. Some of the new reactor types are said to be using nuclear waste and not only newly prepared uranium. How do you see that situation?
I think the area with micro reactors and small reactors, or reactors that are utilizing recycled waste, is very promising, actually. And I think it's a necessary area to see innovation there. When we talk about the demand for uranium, we're really just talking about the large 1 gigawatt reactors that are built in population dense areas and cities. And they are really their style of consuming uranium, their predictability of demand is much different. We're not factoring any demand for micro reactors that will need uranium, or any other analysis for how reactors that are going to use recycled material might be needing less. But again, the reality is those are not large-scale reactors. Those are smaller-scale reactors. I think it's a very promising area with the technology. And I think it's also important to see innovation around taking the waste and reusing it and recycling it, something that France does really well. The US has not done that, and simply it's banned in the US to recycle. And also, I just think it's necessary, and it's a good area.
Then we have several questions to the $1.5 billion US state demand uranium reserve program, I would call it. There are several questions about, don't you think probably that those 1.5 billions are too less to cover the whole demand by the state, first thing? And second thing is, when do you see, or when do you await that the energy suppliers, meaning the large utilities, coming back to the market and start contracting? Because you just said 2.5 years is like what they still have left, and they are not ordering, let's say, overnight. This is not a just-in-time business, right?
Exactly. So just on that last point, the IEA numbers for US, the EIA numbers, the Energy Information Administration, is just out, okay? And it does show that US utilities hold 2.5 years of forward demand in inventory. So the demand should be coming in, I don't know, any day, any week. I mean, we should start to see that at least the U.S. utility demand start to come into the market soon. I can't put a date on it,
of course,
but those are the realities. Those are the hard numbers that we can look at and we can analyze. Sorry, what was the first question?
The first question was, if not those $1.5 billion are a bit too less for the whole US,
so
that they need maybe more.
Well, listen, these numbers were just proposed last year under a different administration. This administration is actually way more bullish on nuclear power and uranium. And these numbers are totally subject to change and expansion. So one area that's being discussed right now, which actually might go to the point of the question, is initially it was proposed as $1.5 billion to be purchased over 10 years. One thing that's being discussed right now in DC is to do $1.5 billion over 5 years, which then means there might be another $1.5 billion after that. So then it could be $3 billion over 10 years. The reality is, with a lot of these government programs, I think it matters less what they say the size is. What you want to do is you want to get the program started. Once the program gets started, then it becomes a regular funding for the government to be behind the program. And typically when governments launch these programs, they don't do them for 1 or 2 years. They really make them longer, and it can really grow. I mean, let's not forget, or maybe I should remind everyone, initially this was envisioned to be much bigger than 1.5. So we've landed, these numbers can really change and they're fluid. And I think ultimately I see it potentially getting bigger because I see there's a lot of demand for uranium right now, not just for utilities, but the U.S. government needs uranium for their Navy. All the micro reactors on aircraft carriers and submarines need uranium, U.S. uranium. All the small modular reactors, they need uranium. Okay, all that work being done by TerraPower, by NuScale, companies that are at the forefront of technology and research, that all needs uranium. So there's, and just yesterday, there was an announcement between US and South Korea to basically do joint collaboration to sell nuclear technology globally. This is the first time I've seen US sign an agreement like this. They want to be a global player, and they're teaming up with the South Koreans to do that. That means, just like Russia, why does Russia have so much uranium interest? Because when they go sell a reactor, they want to also be able to supply the fuel. China, same thing. So now that the US wants to play a global role in nuclear power, and they've signed this agreement with South Korea, they're going to also need to think about uranium and why they're building a strategic stockpile. Because when you go sell technology, you got to be able to back it with the fuel. So again, we haven't seen this in a long time.
That's right. But that leads directly to my next question here, because now we are talking about a government program. As far as I understood, is that this uranium has to be produced in the US. So the question to me is, from where will it come? Because as far as I know, you have in the US maybe, I don't know, 1 million pounds of production still left?
Zero.
Zero. Yeah. So wouldn't it make sense that they force you to restart your plant, and then you get it already on a premium?
Well, they can't force us, but yes, they would incentivize us. Yes, exactly. They would incentivize. That's exactly the point of this program. That's why this is so bullish. Look, we don't need the government. We mine a commodity that is used by 444 customers, being reactors throughout the world every year. They use it, they run out of it, they need more. Okay, so we have a global market with supply, demand, and everything we talk about for the bullish setup is all based on utility demand, no government. If there's government demand, it's going to be the cherry on top. If the US government needs to buy physical uranium, and I say if, but we know they've approved the program, they're funding it, and they're going to buy a lot. But if that happens, or when that happens, because right now there's no uranium mining in the US, I think it's going to create a frenzy. It's going to create a really forced situation in a positive way, because everyone's going to want to mine uranium in the US now to sell to the US government. And that's, Johan, the point I made earlier, that initially there might be a premium price for US mined uranium, because you can sell it to the US government at a better price maybe than the utility. That may not last forever, but initially there could be a premium. And I think that's a nice position for us to be in. We have flexibility. We have the flexibility that we can sell to the US government, to utilities. And that's a nice position to be in. Those are all good customers to have.
Okay. Then we have a question from a Swiss fund manager, whom you and I know also very well. Amir, I agree with all your arguments, but all this information is in the market. It is working for copper, lithium, and a couple of other commodities. What will it take to finally move the uranium price? Apart from production, where else is the supply coming from today?
The supply of uranium comes from really two sources. Primary supply, which is production, which has been really declining. 120 million pounds of production last year versus 180 million of demand. And you also have the secondary supplies or above ground inventories, most of which is in Japan. Now, the Japanese government announced that they want to reduce their carbon footprint, and they're committing to 22% of their electricity to come from nuclear power. So the Japanese aren't going to sell all their uranium or all their inventory. That, for them to be 22% electricity means going back to pre-Fukushima levels. That announcement is recent and I think very bullish. We could ask, where is the uranium currently coming from? But I can tell you, when you go into the physical market to buy uranium, and we were just in there recently to buy uranium for UEC, there's not a lot of supply available. We started buying at $27. We bought 2 million pounds. 2 million pounds is enough uranium to run 4 reactors. There's 444 in the world. To buy enough uranium for 4 reactors, we moved the market from 27 to 31. So even though you might ask, what's it going to take to move it? Where's all the supply coming from? There isn't a lot of supply coming right now. The market is very illiquid. This market hasn't been tested. If a utility, Duke Power comes out tomorrow, they own 18 reactors in the US. They operate 18 reactors. Just to get the uranium for 18 reactors, they would need to buy 36 million pounds of uranium if they're covering 3 years of need. That material doesn't exist in the physical market. So this idea that where is the material coming from? Well, there isn't a lot of material out there. Okay, it's very illiquid, and that's how the uranium market has always been. It's very illiquid. Once it's tested with real demand, then you see the price appreciation. It hasn't been tested with real demand. We know the utilities in the last year were more preoccupied with COVID. If you're running a power plant, and now you got to do social distancing, and you got to keep people safe, and you got to mask everyone up, you're not thinking about buying uranium. You're thinking about how to run a nuclear power plant without shutting it down. So first, we had a year of distraction with COVID. Prior to that, we had 4 years of distraction with trade policies that Trump was flirting with. Utilities didn't want to go buy a bunch of uranium if there was going to be tariffs and quotas. So we've had multiple distractions here. But now, as we come out of COVID, we don't have a lot of distractions, and the utilities can see, they're not stupid, they see Sprott, an asset manager, is going to come and start buying more physical uranium. That is going to, I think, create competitive tension. And look, I can't tell you exactly when we're going to see a rush into the market, or we're going to, but it does look like the right setup for that to happen. It was exactly the same thing in 05, 06. Quiet. Once the market got tested, we went from 20 to 80 to 140 within 15 months. Same thing in 2010. We were at $40, just churning. Not a lot of volume. And all of a sudden, in 4 months, we were at $70 by March of 2011. So because it's an illiquid market, it can sometimes be misleading. You see a spot price every day and you think, oh, there's a lot of it. I can buy all you can eat at $30. No, it's not the case.
That's interesting. I always said, when we wake up in the morning here and uranium is $5 higher, that's the start of it.
Yeah, you need a $5 move. That's a good point.
Exactly. Yeah, absolutely. So what is the cost of storage in a US uranium warehouse? Meaning you have 2.3 million pounds now. So what does it cost you? Is that a high cost, or how does this work?
It's hard for me to comment on that because we haven't disclosed that, but I'll hint at it. It's extremely low for us. Why? Because the only warehouse in the US where you can store uranium is a facility that also is a converter of uranium. So they provide the conversion services of uranium oxide to uranium hexafluoride. Typically, if you have what is called a producer's account, which we have as a producer, your storage fees are either low or nothing. Because typically the service, the fees that are generated from conversion, which is paid by utilities that buy from us at that facility and then pay that facility to convert the uranium, that's where the real money is made. So due to the fact that we have a producer account, I can just say that we have a very low, almost negligible storage fee. And that's a very unique position for us to be in. I can tell you it's not the same if, let's say, you're a uranium participation, or if you're an investor, or if you're a hedge fund that opens an account to want to buy physical uranium. Your cost would be, could be as high as 50 cents per pound per year, or $1 per pound per year. But that's not the case for us. And we felt that was also another reason or advantage to accumulate physical, because of the special account type that we have.
Then we have a question from a private bank here in St. Gallen. Is UEC now on the whitelist in terms of ESG ratings, or is this still to come?
Well, certainly, we certainly are, and we're certainly working with. We're currently working on better even communicating and defining our ESG profile. Many uranium mining companies and the nuclear industry in general, because of how heavily regulated it is, automatically meets many of the ESG protocols or standards that have been set by different benchmarks. The challenge is in making sure you speak the language and communicate those parameters the way it should. To give you an idea, one of the big challenges, you look at Newmont Mining when it comes to the gold industry, they've had numerous announcements about how they want to reduce their carbon footprint at their operations. Now think about conventional mining. If you're Newmont and you have big ore hauling trucks moving ore everywhere, think about the amount of diesel you generate. Now think about uranium mining using in situ recovery, where there's no ore hauling. You're just moving water around. We have a much smaller footprint. In fact, almost you could argue we're at net zero operation because we don't really generate CO2 when we operate.
Okay.
Well, and so from an ESG point of view, we're working on towards really better communicating these aspects. I think we very much are an attractive target for ESG institutional investors because the end result of what we mine, uranium, is also the fuel for emission-free electricity.
That's right. And you even have cows on the top of your mines.
We do. Yeah, we coexist with.
Exactly. So then there's a question from a Geneva investor. You just raised $200 million while selling warrants. I think it was not all warrants, but anyhow. Please elaborate on all the existing warrants at present. So how many warrants do you have? What is the average exercise price?
Okay, well, we didn't raise $200 million. I think they're referring to. To recap, and just so I'm not, so let's just get our numbers right. I think that the 200 million is referring to a shelf filing, but that's just that's not money that we raised. That's basically a shelf filing, which means the company may raise money in the future, but we haven't raised that 200 million. We raised $10 million. That was the last raise that we did. It didn't have any warrants attached to it. And that financing was done at $3 and I believe it was $3.30 or so, right? Let's just pull that up. I'm just looking at it here. $3.30 was that last one, which is higher than the current share price. The one before that was for 30 million, and that was at $3.05 a share, also no warrants. So last two financings that the company has done did not have any warrants. They were just share offerings. Okay. Now, the warrants that are outstanding from a financing we did last year, Those are outstanding, and I think those what's left there is about 6 million warrants, and the average price, or sorry, the strike price is about $2, and those are good until September.
Okay.
Sorry,
this year?
September next year. No, next year. Yeah.
Okay, cool. Then again, if we have to come back to the supply demand side, there's a question from an investor in London. He sees the supply side, demand side, that is all quite clear, but he wants to know, have you spoken already to buyers? Have you been approached from utilities, for example? Don't they see that they are running into the same trap, I would call it, like 2010, 11, or even if we take it like 2000, what was the last bull market, was 2006 to 2008, right? In uranium, the real big one before the financial crisis. Don't they see that they are building up the same trap like 20 years ago almost?
First of all, to the investor that asked that question, and to probably everyone else here, I know it seems silly, right? It's almost like I think we're all thinking about the same thing. The writing is on the wall. How can we see it and these utilities don't see it? This doesn't make sense. I get it. It doesn't make sense. But this is the nature of the uranium market. And so now let's talk for a second about how a utility buys uranium. A fuel purchasing manager at a nuclear power plant is not a C-suite or executive level job. There are very complex steps that a fuel manager, which is basically a purchasing manager, has to take before they can buy uranium. They're not as nimble as, let's say, even we would be, where when we decided to buy uranium, we went into the physical market quietly and started buying. Utilities have to, by way their process, and some cases they're public utilities, they issue tenders and they say to the market, we're looking to buy 600,000 pounds or 1 million pounds of uranium. Please submit offers to us. So this happened recently by Duke Power, a utility in the US that owns 18 reactors. We submitted an offer. We didn't submit a very aggressive offer. We kind of felt we were going to not win the business, but we engaged, and we have a couple of individuals on our team that have spent their whole careers marketing uranium. So Scott Melby, who's our executive VP, was the president of Cameco. Cameco is the world's biggest uranium producer. He was at Cameco for over 20 years. He built Cameco's book of contracts. And so clearly, the team that we have fully understands how to sell uranium, but we're not going to sell uranium at $30. But then when we talked to Duke, after they bought some of the uranium they needed, they expressed concern that they were concerned that the market was going to get away from them if all these financial buyers came in. But at the end of the day, the purchasing manager has to go through the steps that they have and how they issue tenders and how they buy uranium. Don't forget, you don't need to feel too bad for these utilities. Why? They can pay 3 times the price of uranium to secure what they need, and uranium price will still make less than 5% of their overall cost to run a nuclear power plant. So unlike gas-fired power plants, where if the price of gas changes by 20%, it can drive it's 80% of the cost in a gas-fired power plant is the cost of gas. 80%. And nuclear power is less than 5%. So where you get real price discovery in the uranium market is where you're going to get a lot of volume of buying come in from utilities to secure contracts like 2010, like 2006, 2007. And when that happens, the uranium price in that price discovery exercise will end up somewhere where the utilities can procure the volumes that they need, which is going to be, like I mentioned, 1.4 billion pounds of uncovered reactor requirements over the next decade. So we have to ask ourselves, where is the convergence of incentive price for the uranium industry and volume, where the utilities can get volume? You can't get volume at $30 because even the best mine, MacArthur River in Canada, is shut down, right? So where are we going to get a true price discovery exercise where we get volume buying by utilities? I think with 2.5 years of forward demand covered, we're in that zone where we're going to start to see that happen. And where the industry can then respond by saying, here we go, we can supply the volume. Industry can't supply volume right now. Industry is producing at its lowest level of total production in the last 10 years since Fukushima. Mm-hmm. But we are seeing utilities come, but just remember, these utilities move slow. But when they need to procure, whatever they procure, if they pay 3 times, 4 times what the price is right now, will still be less than 5% of their overall costs to operate a nuclear power plant.
Mm-hmm. Okay, then we have a journalist from Munich. Amir, great presentation. Thanks for that. Would it be possible at your Hobson separation plant to separate rare earths too, as Energy Fuels is planning to do at their site?
We really don't plan to do that, and we really don't want to be distracted that way. We really don't see that as being additive. The big problem with that is securing really, I think it's about specialty and focus. So we're focused on uranium. We want to remain focused on uranium. And so while there are possibilities to add additional circuits to recover additional commodities or streams or minerals, we're remaining pure play focused on uranium. We think the focus factor will make sure that we'll do an excellent job at the one thing that we're trying to focus on, which is uranium mining. Mm-hmm. Drive the best cost, the best service, the best product for that one product, and not create additional distractions for the company, because mining is a very complicated business. Metallurgy and separating rare earths from other these are very complex, complicated procedures. Uranium mining itself is very complicated. We want to be pure play focused on uranium, and that's the way we're designing the company.
Okay, great. Then we have another German shareholder. Your projects in Texas are inexpensive to exploit, but currently hold only a few years worth of resources. When will you turn your attention to your much larger projects in Arizona, Colorado, and Paraguay?
So we have currently 20 million pounds of uranium at our Texas projects. And we have a 2 million pound per year capacity or potential at Hobson. That's a 10-year mine life. 10-year mine life is a very adequate and a strong start for operations. I wouldn't call it a couple of years. I think you might just be looking at Palangana if you comment on that. So with a 10-year mine life at Texas, and the fact that with every drilling campaign we've grown resources at Brook Hollow, we believe that resources in Texas will continue to grow. Having said that, we really like the Anderson project in Arizona. It's a large deposit, and we are planning to do work at Anderson. This is, again, going to have to be, we have to pace ourselves with the uranium price. We have enough projects to bring into production if we get to $50, but we don't want to spend too much capital, which means then dilution for the company when we're trying to time our spending with the uranium price improving. So that's the nice position UEC is in, is we have projects that are available for production in Texas and in Wyoming, but then right behind them, we have big projects like Anderson at almost 30 million pound deposit. It's in a mining friendly state like Arizona. And we're not even talking about Anderson right now. We haven't even spent a slide on it. This investor asked about it. Great question. But that's the nice thing about, Johan, using a football analogy, UEC is like Bayern München. You have multiple players on the bench. There's all these great players you can bring off the bench. We're just focused on the starting 11. But if you want to go deep into the bench, there's some great players on that bench.
That's right. Absolutely. Yeah, you have a team A and a team A on the bench.
We really do.
That's right. Then we have another great question here from an investor in Hamburg. Dear Amir, maybe I missed that point, but what do you think about the 4T generation of nuclear power plants? Isn't that a possibility not only to produce clean power, but also hydrogen and burn the old G2 nuclear waste? Wouldn't that be another reason to build new power plants and therefore more U308 demand?
Again, I think I'm generally a huge fan of these new technologies and these new iterations of nuclear reactors that are coming out. I just try, in the context of this presentation and in the context of thinking about supply demand, to bank on what we know is real demand and real supply. the research and development and the technology side of nuclear technology is super interesting and promising, but a lot of this hasn't yet become large scale enough to say that there are X number, which means X amount of demand for uranium, and then kind of build our market case. So these are incredibly potential, promising areas. You know, I mean, look, it's fascinating. We're scared of nuclear power, right? Or there still is this public perception around nuclear power. But then you think about like those, literally, like, you know, the SpaceX rockets that are going and trying to get to Mars. You know, those are running on nuclear power. Those are micro reactors that are powering our way for space travel. You look at micro reactors in submarines and these aircraft here. There's incredible potential to really advance the human race when we use an energy source that at the heart of it is a technology. You know, if you think about fossil fuels, it really is kind of a caveman way of generating electricity. We're digging out dead animals and we're just burning them. Nuclear technology at the heart of it is a technology that creates energy and has a big, I think, the public relation around it because of nuclear waste or nuclear weapons, etc., has always given it a bad image. But it really is, I think, getting the recognition now that it is needed in the toolbox. We have to have a toolbox of energy, renewables, nuclear power. We need them all. And in that toolbox, you need nuclear because with micro reactors, with large reactors, you can do things that you can't do with any other power source. Large scale, consistent power generation that's emission free. These are incredible, really powerful qualities.
Absolutely. One more question on that is those SMRs, small modular reactors. I think they are becoming more and more prominent and powerful. I think just Great Britain announced to build 12 of them with Rolls-Royce together, which will give like 6,000 jobs altogether. And also I could imagine like for remote areas with mining, like for example in Nunavut or stuff like that. Yeah, I could imagine also like an SMR makes absolutely sense. Could you imagine that this is also a way in the future holding up really the demand?
Yes, I think first of all, I encourage everyone to go and watch a video that's on our website at uraniumenergy.com. It's actually a testimony that Scott Melby, our executive VP, gave at the US Senate recently. And in that testimony, you also had testimonies from CEOs of some of the large SMR companies in the US. And when we speak to the Department of Energy right now, okay, one of the reasons they want to buy the uranium to start the program is they want to make sure the fuel, the nuclear fuel needed in small modular reactors is referred to as HALEU. HALEU fuel is uranium, but then enriched a certain way that is used for small modular reactors. The US government is very focused right now. One of the top priorities that they have is to make sure that there's enough HALEU fuel available for small modular reactors, which is one of the reasons that this US strategic reserve is getting picked up. So, Johan, I think that goes directly to your question that yes, there is development underway that is the foundation right now, I believe, for the next chapter of demand for uranium coming from small modular reactors. We're seeing the early phases of that right now. And these governments like the US wants to lead the way in small modular reactors. Hence, they're making sure that the specialized HALEU fuel needed for SMRs is something they have abundance of to really make sure the companies that are building these, and the US really is leading the way. Go check out the Department of Energy's advanced modular reactor website. There's a ton of information about it. They've given out hundreds of millions of dollars of grant money to researchers in this area. I think the US recognized that it lost the leadership position to build large-scale reactors to China and Russia. Where I believe they're really regaining leadership is with SMRs and these joint venture partnerships like the one announced yesterday with South Korea to collaborate together on the large-scale reactors with the countries that have that expertise. And that's really South Korea, China, and Russia.
Fantastic. I think we should also ask one question which is not related to uranium, and this is Alto Paraná in Paraguay, your titanium project. Because my feeling is, I think it is almost the largest titanium project in the world, I think. And it looks to me still like a hidden treasury, I would say. And what are the plans to monetize that or to move forward with it?
Well, we're definitely more aggressive on that now than ever before. Why? There's this thing happening. Have you heard about it called inflation? And
that's why I'm asking.
I'm joking. With the inflationary pressures we're seeing in just about every commodity, the price for ilmenite, which is the feedstock for titanium, is at a 10-year high. It is above $200 per ton, and in some cases as high as $300 per ton. Our Alto Paraná project is an extremely large, one of the largest undeveloped deposits in the world, under 5 billion tons of high grade, 7 to 8% grade titanium oxide that starts at surface and goes down about 10 to 15 meters. It's an incredibly attractive project. You know, the last time the ilmenite titanium price was this high was in 2012. And at that point, our project was valued over $100 million. And so we have a situation for sure where we're prioritizing the development of Alto Paraná. We want to establish an economic assessment there. We have a team. We've hired a consulting firm, TZMI, which is the leading engineering firm for titanium in the world. They're developing a study for us right now that allows us then to use that study to sell the project or spin it out as a new company that we would be the largest shareholder in, and basically daylight value for this asset that we've held since 2015. When we acquired this project in 2015, the ilmenite price was $50 per ton, 50. And today it's over $200 per ton. So we have an incredible opportunity here. We bought at the right time because we were in Paraguay and we saw the fact that this was a world-class asset. And we now have a perfect window developing. There's a shortage of high-quality, high-grade feedstock for the development of titanium alloy. Now, remember, titanium is primarily used as pigment in paint. So it's a true GDP commodity, right? As the world comes out of the pandemic and looks to restart and rebuild and construction booms, we're going to need a lot of the demand for paint and pigment is going to go through the roof. But you have companies like Mitsubishi who have announced plans to develop new batteries that use niobium and titanium mix for an improved or longer lasting versions of batteries that they're introducing. Not to mention use of titanium in aerospace and defense. So there's very interesting applications also for titanium, because titanium has one of the best strength to weight ratios. It has the same strength as steel, but is much lighter. Okay, Absolutely. So it becomes it's a very valuable commodity. And we're seeing the price appreciate. And we have the largest deposit. It's truly a world-class deposit that UEC owns. And now we have a market environment to try to advance it. And like I said, we bought it at the right time. We paid less than $5 million for it, but at a time when the market was crashing for ilmenite and titanium, late 2015. And the environment in the world, we're in a different world now.
So this is like the triple-digit million joker for your company.
Look, it's a tremendous asset, whatever you want to call it. Yeah. And we have, that's the thing about UEC. UEC has, look, our 18% equity stake in Uranium Royalty. Our average cost base, Johan, there is $1 a share. And that company is now trading almost at $4 a share. We've realized almost $50 million of value for our company. I mean, it's a paper gain, but it's a gain. I mean, what other uranium company in the last few years at $30 uranium has generated 50 million gain for their shareholders, right? We've crystallized that now. It's a mark-to-market security. This titanium asset, we're going to do the same thing with it. We're going to daylight and unlock value like we did with Uranium Royalty. And that's the thing about UEC is, as you know, when the bear market for uranium was there, we were actively buying projects. And now you have crazy inflation in the world. It's a great time to own hard assets and projects and mineral in the ground. And we have a lot of it, over 100 million pounds of uranium in the ground, 70 million pounds of vanadium, 5 billion tons of titanium and iron ore, and this very strong equity position in uranium royalty. And look, uranium royalty is a great business, right? They have over $70 million of cash. They have no burn rate because it's a royalty company. They don't have any capex, they don't have any opex. And their royalty exposure is on some of the best uranium mines in the world. McArthur River, Cigar Lake, Rio Tinto's Rough Rider deposit in Canada. So, UEC is really ideally positioned with assets. You have a lot of assets, not just one project or two projects. You have a portfolio of over 20 different projects with these commodity exposures that we just talked about.
Last question. We saw that approximately 40% of your resource is inferred. Do you have to upgrade that before you can produce? And let's put it that way. If we look at Reno Creek and Burke Hollow, how much more money is needed to bring them into full production? And where do you see the timeline for Reno Creek finally?
With in-situ recovery, there is no regulatory requirement that says you have to have that inferred resources can't be mined. So absolutely, we can mine the inferred resources at Burke Hollow, and those resources will be upgraded to measured and indicated because we're currently drilling them, and that's part of our program. And in fact, look at the fact that inferred has been the resource category at Burke Hollow all along since discovery in 2012, but we got all of our production permits. So for permitting and production, resource classification is not a requirement, and resource classification is a Canadian standard under 43-101. Production permitting is under different guidelines depending on each jurisdiction and state. We also, the reason why we carry more inferred resources is because for in-situ recovery type deposits, we don't drill on 50-foot to 100-foot centers. The drill density is different mainly because we're chasing low-grade and fairly sinuous and long ore bodies that occur over a bigger distance. And so we're trying to fence off the overall extent of the deposit, which is very different than if you're drilling a high-grade ore body where you have to find the concentrations in pods. And so you do denser drilling, and so your M&I count is higher and you have less inferred. So the fact that we're focused on in-situ recovery is one reason as to why we carry a bigger inferred, but that doesn't limit our ability to mine it. And over time, it will be converted to M&I as we get into a greater drill density. Over the next 12 months, we're planning to spend our total cash expenditure for the company, including all the drilling we're doing, is about $12 million. So that's the plan. And over this time, there will be some work done at Reno Creek, but Reno Creek is 95% already converted to M&I. Why? It's a historic project. And it was initially discovered in the 80s, and there was a lot of work done by previous owners. They've drilled over 3,000 holes at Reno Creek. We've only drilled 700 holes at Burke Hollow. So as the drill density at Burke Hollow comes up, there will be more conversion. At Burke Hollow, almost 95% of resources have already been converted to M&I. The study that we're doing at Reno Creek is to determine if we can save money by shipping the uranium to Cameco or Uranium One's idle processing plants and process there. That'll save us the money on not needing to do a processing plant. So we're evaluating that right now. But to advance Burke Hollow forward, in the next 12 months, we will plan to spend $12 million for the entire company. I'm not saying just at Burke Hollow. And probably roughly $2 million of that will be just drilling at Burke Hollow. And the balance will be the studies that we're doing at Reno Creek. We're doing some work, as I mentioned, at Alto Parana. We're doing work at Anderson. We're advancing multiple projects forward. And so it's I think we have a very active year ahead of us.
Okay, and timeline for Reno Creek to be finally in production? Is it 95% is done?
First of all, it's fully permitted. So if we have the full permit to either build our own processing plant or to ship to another processing plant, we're permitted at Reno Creek. We will look for $50 uranium, Johan, before we build Reno Creek. So we don't want to get ahead of ourselves and
of course
spend at a faster rate than the rate of uranium price moving. But tomorrow, if you get $50 uranium, we're fully permitted, ready to go. 95% of projects, including all the big ones in Canada, are not fully permitted. Okay, so they still have years of permitting in front of them. So we don't need to get too far ahead of everyone. We're already ahead. We're fully permitted. And so our cost of capital comes down if the uranium price goes up. And we don't lose any market share because we already are fully permitted. That means we have a 3 to 5 year head start from any other development project that is not fully permitted yet.
Fantastic. Super. That's a great final sentence. 3 to 5 year head start. I love that because we are well over time now, 1 hour 15. Great, Amir. Thank you very much for taking the time. I can listen to you at least another 2 hours because it's always so interesting. And I really can't wait that we meet us personally, to be honest, and have a nice dinner in Zurich or somewhere else. And yeah, thank you very much for taking that time. Please keep well and hope to see you soon.
Thank you, Johan. My pleasure.
Thank you. Yeah, ladies and gentlemen, that was our longest virtual roadshow ever, 1 hour 16 now. Thanks for staying with us that long time. And also when you are watching the replay tomorrow, thanks for being with us. And I think UEC is an exceptional story in the uranium universe. Definitely a stock you should own. I am a shareholder and I will buy some more after that hour. That is also for sure. And I think Amir and the team has done everything really in the right place, in the right time. And don't forget, Alto Parana is triple-digit million-dollar joker the company has. I think, to my understanding, not really figured fully in the value of the company by now. And yeah, to be ahead 3-5 years then ahead of the curve with the restart of production when it's possible with uranium prices. And I have also a good feeling that this could be earlier than later than we think, to be honest. And watch out for that. Really, $5 when you wake up in the morning, uranium price is up. This is the bell ringing for the uranium market. And things look fantastic, as Amir said. So thank you very much. The company is fully cashed up, and with the physical uranium, they are also in the position really to negotiate already contracts with utilities. That is also a big advantage that they have. And I would suggest you do again a bit of homework in the company if you are not yet a shareholder, and if you are a shareholder, well done. So thank you very much. Wish you all the best here from Switzerland. Stay healthy and hope to see you all soon. And we move on in 2 days then with Torque Resources on the Thursday on 5 o'clock. Thank you very much and bye-bye. Amir, thank you very much. Take care. All the best.
You too. Take care. Thanks.
You. Bye. Bye-bye. Ciao.
Ciao.